On this episode of That's My Houston, we're going to test your investment skills and show you how anyone can invest. Today we have a special guest, Troy Sharpe, founder and CEO of Oak Harvest Financial Group here in Houston. They have been featured on CBS, NBC, Forbes, and are highly recommended by Dave Ramsey. And we're here filming at this fabulous estate just down the way from their headquarters, 766 Bunker Hill Road, listed by the wonderful Mark Fuller with Southwestern Real Estate. Thank you so much for being here with us today.
Good to be here, Summer.
Troy has hand-selected an incredible team of financial advisors that will successfully handle your investment management, financial and tax planning. But what I love is their vision. You have created a boutique firm that is family-oriented, but you also give a wealth of knowledge to people for free.
So ever since I was a little kid, I remember watching with my grandfather the ticker tape going across CNBC, and I was always amazed by the stock market. As I got a little older, I got my finance degree, but right after college, my grandfather had an aortic aneurysm, and it took about 3 years taking care of him, and I saw how they weren't properly cared for, how the planning that they didn't receive could have changed their lives. So as a 29-year-old kid, I moved across the country and started Oak Harvest Financial Group, and the mission has always been to provide world-class financial planning with investment management, but more importantly, customer service, because it's not often you get world-class customer service, planning, and investment management in one shop. So helping people understand their decisions, make better decisions, and of course help guide and consult and coach has always been very, very important for me.
Yeah, I was blown away by your YouTube following and the extensive videos that you have. And then you have a podcast, and then you're also a co-host of the Investment Income radio show on Sundays.
Yes, so we started the radio show about 10 years ago, and it's on KTRH Sundays at noon. And the YouTube channel has been great because we started the channel just to be able to disseminate information, help people make better decisions with their with the financial choices they have in their life. So it's really just about helping people feel empowered when it comes to money, as opposed to being afraid, because that fear stifles us, and a lot of times we don't act, and this inaction is what we can't do with our money. We have to act, we have to do something, and that's the purpose of the YouTube channel and the firm and what we do.
Yeah, and the fact that you give such great advice and everyone access to financial information has been a huge benefit, and I've sent it to my kids. I'm watching, I get my husband in there, and it's just, we really thank you for providing that service to so many people.
You're welcome.
So we're going to test your knowledge and your investment skills. So we have a couple questions for you. So let's see. To have $1 million in your retirement account by the age of 65, about how much would you invest per month if you start at age 25? Is it $728, $915, $380, or $1,100? What's the answer?
The correct answer is $380. So the most powerful investment element of all is time.
Yeah.
So if you're 25, and this is assuming an average of about 7% a year, which should be very achievable over a long period of time. We're talking 40 years here for someone who's 25.
Right.
$380 a month is only about $182,000 over the course of that 40 years that you've saved, and earning 7%, you'll have about $1 million in your account at retirement.
Wow, that's incredible. So to have $1 million in your retirement account, if you start at age 45, how much would you have to contribute per month? Would it be $3,200, $1,920, $2,250, or $1,125?
And the answer is $1,920 a month. So that's what, 3-4 times the monthly savings that you'll have to contribute to reach that $1 million number. And it's, of course, you have 20 years less, and time, as I said, is the most important element of all. So we need to save as soon as possible. And when it comes to saving, it's about creating good habits. I don't care if it's $1 a month or $5 a month, you create that habit when you're younger, that carries with you into your years as you age. And when you're in the prime of your career making good money, saving is no big deal because you've built those habits.
Well, I hope there's some young viewers out there that are going to get a kick in the butt to start doing this. Do you recommend any apps or sites out there for people just starting?
So for me, the big brokerage houses, the Fidelities, TD Ameritrade, they make it very, very simple, tons of research. I've personally never went on Robinhood.
Okay.
To me, Robinhood seems more of like a trader's app, and,
Yeah.
and trading is more like gambling. Around 99% of people who trade lose their money. So when you trade, you're competing against the best in the world, the Goldman Sachs, the MIT grads, and you want to invest. The longer you invest, the more likely you are to make money. The more trading you do, that's more similar to blackjack or roulette.
Okay.
So the house always wins. So invest, it's not about timing the market, it's about how much time you spend in the market.
So long term,
Long term.
keep it in there.
Yeah.
There you go. So we asked a lot of viewers to submit questions for you.
Excellent.
So question number 1 is, should I invest or pay off debt first, or can you do both at the same time?
So we have a relationship with Dave Ramsey. We've been one of their Smart Investor Pros for many years, and Dave would kill me if I didn't give the correct answer here. But so when you pay off debt, it's a guaranteed rate of return. The average credit card interest rate in this country is 21%. The average college loan or student loan interest rate is around 6-7%.
Right.
So you have to pay off that debt first. It's a guaranteed rate of return, and then once you're debt free, you can start investing. Now, one thing I will say is a mortgage is different. That's good debt, assuming you're not out buying speculative homes. But yeah, definitely pay off your debt and then start investing.
Perfect. Next question is, I have a love for shoes, but I do know I need to make better financial decisions. What's the cost of delaying opening my investment account?
So it's funny you say that. I had dinner with a friend not too long ago, and he showed me he bought a $2,000 pair of boots. So I said, man, why'd you want to spend $8,000 on those boots? He said, what do you mean, Troy? $2,000. I said, well, if you would have took the money and invested those boots, in 20 years, that money, 2 turns to 4, turns to 8, again it's 7%. So this is a concept we call the opportunity cost of money. We either can save, spend, or invest. When we spend, it's money we don't have to save or invest. And investing, again, over time, we have to look at the opportunity cost. What else could we have done with that money, and the true cost that we'll experience from making that decision. So be careful with the shoes you buy.
Okay, these were inexpensive. How much should I have in savings, and should I invest while trying to build that savings?
So for me, if you have a secure job and you're not concerned about losing it and losing your income, you can have a little bit less savings, maybe 3 or 4 months. If your job situation is a little bit less stable, if you did lose your job, it'd be very hard to find another one. You want to have a larger cushion there to provide your family some security.
So like 6 months?
Say 3 to 6 months.
Okay.
And keep in mind, when money is invested, it's not like it's not available to you. You can always go in and get it out. They're just, if the market's down, it may be worth a little bit less.
Okay. What is your best advice to investing my first $1,000?
So your first $1,000, the most important thing you can do is just get invested in the market. You open up an account, you go in, and where it says the little ticker screen where you want to buy, just buying the S&P 500, you type in SPY, it's SPY.
Okay.
And you'll own 500 of the best companies in the world. And we're talking Amazon, Microsoft, Home Depot, Walmart. These companies make money. When we own these companies, we actually own their assets. We own a small portion of their assets, but we have a right to their profits, their growth. And as those companies grow, our money will grow over time. And that's a simple, easy way to do it. Super, super inexpensive. And that gets you in the game. And then from there, you can continue to build your knowledge and education and hopefully save and invest.
Yeah, I had no idea that existed, because in my head I was thinking I had to strategically pick all these different places, and that's just done for you, and you just keep it in long term.
Yep.
So this is my question. I'm self-employed, and what investments are good for not having an early withdrawal penalty?
So the accounts that have early withdrawal penalties are the retirement accounts.
Correct.
So they're stuck in there until you're 59 and a half, with a few exceptions. So once you have your credit cards paid off, student loans paid off, you have a little money in the bank as a savings. For me, the best investment, especially in this very, very low interest rate, is get the money in the market. You're going to get the greatest returns over the longest period of time. And now's a great time to get invested as well, with the economy reopening and growth starting to accelerate out there. Prospects are good for the future, as well as all the stimulus we're seeing from the Federal Reserve and Congress. So it's a great time to get invested, and that money is liquid and available if needed.
Perfect. What's the difference between investing in a 401k and an IRA?
So they're both retirement accounts.
Okay.
When you put money in, you get a tax deduction on that income, meaning you don't have to pay income taxes. If I make $100, I don't have to pay taxes on that income if I put it in my account. The 401k is just your workplace plan. An IRA is your private plan. So you can only put a limited amount of money in your IRA, but you can put a much bigger amount in your 401k. And your employer oftentimes will match that contribution. So workplace plan is the 401k, your private retirement account is the IRA, and this is your long-term 20, 30, 40, 50-year savings money that's sole purpose is to provide you an income in retirement.
And what is a Roth IRA?
Great question. So I'm a big fan of the Roth IRA because taxes are probably going to be higher in the future. And every dollar we put into the Roth, all the growth that we achieve over the years, we can take all that out tax-free. So part of planning when you're younger is positioning yourself for the future. So you want some of that retirement account money to have tax advantages today, but you also want some tax-free money. So in case taxes are higher in the future, you have choices of where you can take your money from.
But you are paying taxes on the Roth IRA.
But you are paying taxes today.
Just not later.
Yep, and that's where a coach or a counselor or an advisor can help you. If you're in a high bracket, it may make sense to take the deduction today. If you're not in a high bracket, tax-free is probably the way to go.
So when should I seek out a financial advisor and what should I look for?
So I tell everyone, if you're looking for a financial advisor, you want to be aware of the scammers, the people who claim to be financial advisors. A lot of people are sales people in this industry, so you want to find a certified financial planner or a chartered financial consultant. And I say the best time to do it is as soon as you're starting to want to put a plan together, whether it's college or savings or investment. Having guidance is going to help you save more money, make more money than all the mistakes you'll learn the hard way from doing it.
So how can people listening and watching that may not have a lot of money benefit from what you do?
So a passion of mine has always been to help people make better financial decisions. So we're starting the Oak Harvest Access program. So this is for people who don't quite have hundreds of thousands of dollars saved to be able to have sound coaching, sound advice, and we're going to put plans together for a flat fee and then simply charge a monthly subscription, $50, $60, $70, $80 a month, something like that, provide coaching and counseling, make sure you're on track with your savings, managing your debt, the college stuff, getting the kids and those things planned for so you can sleep better at night and have more peace of mind.
Oh, that's brilliant. Thank you so much for all this knowledge. And I even opened my first Ameritrade account because of watching one of his videos. And we're gonna put all his links below of where you can go for his YouTube and his radio show. You have been amazing, and thank you for inspiring us to really focus on our future.
You're welcome.
And thank you for watching and for spending some time with us.